Investment. Allocating a proportion of your savings to a range of securities and asset classes in hopes of earning a positive return to provide you with enhanced capital at some point in the future. Capital refers to the financial resources or assets available for a business to invest and grow. Income in the form of cash, equipment, or other assets used to produce goods or services. Cash and cash equivalents. Interest-bearing deposit accounts. The advantage in the short term is a low risk and ease of access, while in the longer term, simple deposits are far from risk-free. The most obvious problem is the potential loss of purchasing power in a period of general price inflation. Security. A tradable financial asset that represents a value, such as a stock or a bond. Securities are generally bought and sold on public markets to raise capital or as investments. Stocks and shares. Securities offering the fractional ownership of listed companies or corporations. Shareholders own a fraction of the company's earnings and usually receive an annual cash dividend. Dividend. A distribution of a company's profits to its shareholders. When a company makes a profit, its board of directors can choose to either reinvest those earnings back into the business for growth or distribute a portion of them to the owners, the shareholders. Bonds. Corporate bonds are debts issued by companies. These securities typically pay a rate of interest, or coupon, over a fixed period of time. Typically, higher rated quality companies will pay a lower rate of interest than lowly rated companies, sometimes referred to as junk bonds. Gilts or treasuries. Debt issued by a government at a fixed coupon for an agreed period of time. Government bonds are typically rated as low risk. Index-linked gilts or treasury-inflated protection securities. Tips. Bonds issued by governments offering a return adjusted for future inflation. Real estate or property. Ownership, either directly or via a fund, of residential, commercial, and industrial property. Private equity. An investment strategy where a firm raises capital to buy, manage, and often restructure private companies with the goal of increasing their value and eventually selling them for a profit. Cryptocurrency. A digital or virtual currency stored by cryptography, operating on a decentralized network without a central authority like a bank or a government. Collectibles. Alternative high-value investments such as classic cars or fine art. Stock exchange. An institution which provides markets in a range of securities, facilitating trading activities. Futures and options. A future is a contract to buy or sell a specific asset at a predetermined price on a future date. An option gives the holder the right, but not the obligation, to buy or sell an asset at a set price by a certain date. These instruments are used to offer hedging and speculative trading opportunities. Hedging. An investment strategy that seeks to offset potential losses in one investment by taking an opposite position in another, similar to taking out an insurance policy on your investments to protect against an unfavorable event. Fund management. The professional oversight and administration of an investment portfolio on behalf of clients. Clients may include individual investors, known as private clients, or large organizations like pension funds, known as institutional clients. Mutual fund. A publicly available, regulated investment that pulls money from many investors to buy a diversified portfolio of assets. Hedge fund. A private, less regulated investment for accredited or wealthy investors that uses complex and riskier strategies in aims of generating high returns. Pension fund. A large-scale, long-term investment vehicle that pulls contributions from employees and/or employers to provide retirement income. Index. A basket of stocks designed to represent a particular market or asset class. For example, the FTSE 100 is made up of the 100 leading listed stocks in the UK. Index fund. A mutual fund designed to track the performance of a specific market index, such as the FTSE 100, holding the same stocks in the same proportions. Exchange-traded fund. An ETF is a type of investment fund that holds a collection of assets, such as stocks or bonds, and trades on a stock exchange like an individual stock. It combines the diversification of a mutual fund with the flexibility of a stock. Investment banks. Institutions which provide clients with trading, market making, stockbroking, and corporate advisory services. Goldman Sachs and Morgan Stanley are two famous US examples. Portfolio. A collection of diversified securities designed to de-risk the investment process. Compounding. The process of accumulating greater returns of investment over the years by reinvesting earnings and dividends to maximize value. Discounted cash flow. A valuation methodology aiming to calculate the theoretical intrinsic value of a security by aggregating the total of all its future cash flows at a determined discount rate.